Hey guys, it's Chris again with this week's Aloha Tax Minute. Paying tax twice. Understanding the foreign tax credit. Do you work in Hong Kong and pay Hong Kong salaries tax? Many taxpayers here in Hong Kong ask me, why do I still need to pay US taxes? So today, let's talk and I want to explain to you a little bit about the foreign tax credit. So what is the foreign tax credit? The foreign tax credit allows you to receive a dollar for dollar deduction against your US tax liability for taxes paid to a foreign country. The IRS states that the purpose of the foreign tax credit is to reduce the double taxation burden that can arise from having to pay tax on the same income. Let me give you a real world example. Let's assume there's a US citizen working and living in Hong Kong. They're making $200,000 in salary, and that's their only income. They obviously need to pay taxes to Hong Kong while they're living and working in Hong Kong on that salary. And because the $200,000 is in excess of the Foreign Earned Income Exclusion, which is about $133,000 in 2026, this individual likely will be subject to US income tax. But they're asking, hey, I'm already paying Hong Kong tax. So Hong Kong tax is about 15%, and the US taxes in this specific situation could be 24 to 32% tax bracket. So what will happen is this individual will be subject to tax at a higher rate on this excess income above the Foreign Earned Income Exclusion, and in essence having to pay US taxes, but on the excess of the US taxes against the foreign taxes already paid to Hong Kong. So I guess a lot of people are asking, so should I claim the foreign tax credit or the Foreign Earned Income Exclusion? And the answer to that question really depends on a facts and circumstances basis, which is a lot of times our answer to questions. But really in Hong Kong, what happens is many times people will claim the Foreign Earned Income Exclusion first, and then they'll take the foreign tax credit on the remaining income that has not already been excluded. This situation may not be the same for someone working and living in China or Japan, where the taxes are just as high or even higher than in the US. So in those countries, taxpayers may often get more benefit by simply claiming the foreign tax credit only. But this really needs to be looked at into your specific income levels and your specific tax situation. So again, remember, the foreign tax credit is a great benefit to help alleviate or reduce the US income tax. But very, very important, tax returns and the necessary filing needs to be done on a timely basis. Stay tuned for next week's Aloha Tax Minute. Aloha, guys.